I'm Doris. I'm here to share with you about my stock account update. Today, my stock account has earned $90. US stocks closed up and the Dow rose more than 400 points as the regional bank stocks rose. Face the impact of the US debt ceiling talks on global risk assets. Being stuck in debt, the United States is again. So first, let's take a look at my account. In the post market, I've earned $50. Right now, the net asset of my account is 73,050.37. Today, United Natural Gas closed up 0.58% to 6.9. And today, I've included 1,000 shares of SQQ as a price of $26.83. Right now, its price is $26.81. Dow Jones Industrial Average closed up 1.24%. Nasdaq Composite closed up 1.28%, and S&P 500 closed up 1.19%. The industries generally closed higher. The banking industry and the tech industry led the way. The regional banks rose for 3.46%, and the auto manufacturers industry rose for 2.68%. The semiconductors rose 3.05%. Regional banks stocks rose on Wednesday. The regional banks ETF KRE rose 7.36%, while PacWest closed 21.66% higher. The Young Bank rose more than 12%. West Alliance Bank closed at 10.2% higher. The bank said its deposits have risen by more than $2 billion since the end of the last quarter. Analysts say the bank has shown stability in an uncertain operating context, with $22.6 billion in liquidity versus about $10 billion in unsecured deposits. Investors are watching the progress of the U.S. debt ceiling talks. Joe Biden will continue in talks with House Speaker Kevin McCarthy on the debt ceiling later this week. The White House said on Wednesday that McCarthy vowed that the United States would avoid a default. But McCarthy on Wednesday again criticized Mr. Biden, saying the ongoing debt ceiling talks were a fixed obstacle from the White House. Earlier, McCarthy said, after the talks on Tuesday, that a debt ceiling was expected for this weekend. McCarthy also pushed for a Republican version of the bill, saying it would not only raise the debt ceiling, but a $4.8 trillion deficit reduction plan. While White House Press Secretary Pierre said in a television interview on Wednesday that Biden will call members of Congress during his G7 summit in Japan and will meet again on his return. She said Biden was optimistic that they would reach a reasonable bipartisan budget deal that would be delivered to his desk next week and that he could sign it on. Andrew Hollenhorst, chief U.S. economist at Citi, said the meeting between President Biden and House Speaker John McCarthy was held as reasonably expected. We continue to look forward to a long-term agreement to resolve the debt ceiling issue. Treasury Secretary Janet Yellen issued another strong warning on Tuesday, saying the government needs to raise its debt limit immediately because the country could face the possibility of a default as early as June 1st. Without addressing the debt ceiling, Yellen said, not only could the federal government be disrupted, but the underlying recession could be as severe as the 2008 crisis, with more than 8 million unemployed and 45% market value. Economists believe that if a deal is not reached in about 2 weeks, the government may not be able to pay the bills, and the likelihood of U.S. recession will rise. Deutsche Bank strategist Jim Reid said, given the aggressive rate hike cycle and inverted yield curve, we believe that there will be a recession rather than a soft landing. By an inverted curve, he refers to the phenomenon that short-term treasury yield soaring above the long-term treasury yield, called an inverted yield curve, often seen as a clear sign of a looming recession. J.P. Morgan Asset Management said that U.S. recession is almost certain, and that the Fed could cut interest rates by the third quarter as growth loses momentum. CMS Mike Goring, global head of interest rates, said, the market is right to expect a rate cut. Inflation is too high and only a recession can bring it down. He added that America's banking troubles would only increase the possibility of a recession. JP Morgan is bullish on treasuries as the ultimate hedge against a slowdown, and believes that the 10-year yield could fall below 2.5% if the economy suffers a severe recession. On Wednesday's economic data said, total housing starts in April annualized at 1.401 million, compared with 1.4 million expected, compared with 1.42 million last. The annualized number of construction permits in April was 1.416 million, compared with 1.437 million expected and 1.413 million previously. The May 16th meeting of U.S. President Joe Biden with congressional leaders failed to cross differences over the debt ceiling, forcing him to shorten the Asia-Pacific trip and avoid fiscal spending risk when the Treasury ran out of cash in early June. The talks on the debt ceiling are becoming noisy in the U.S. and global financial markets. As a result, the three major U.S. stock indexes have continued to weaken. The latest result is that Treasury Secretary Janet Yellen has set again the date of exhausting its special accounting operation. Could be several days or weeks later than in early June. The debt ceiling negotiations are the latest in the past, with the Trump administration in 2018 and the most intense in 2013, leading to a 16 shutdown of non-core branches of the federal government. The dialogue in the debt ceiling negotiations can lead to a Treasury default and is an enormous deterrent. Markets are willing to hype it because it creates volatility, even short-term Treasury defaults can cause a huge earthquake. In fact, the real impact of the debt ceiling talks on global financial market is how they ended and how they. Therefore, in the face of an increasingly obvious trend of revaluation of risky assets, we should prepare for this in advance. Since the outbreak, the fiscal deficit of the U.S. government has risen rapidly, and by January this year, the U.S. government debt reached a legal ceiling of $31.4 trillion. Especially when the Biden administration took office, the U.S. government has spent money significantly faster than tax revenue growth rate. To this end, if the Republican are unable to use its majority in the House of Representatives, the good fiscal policy. So the Treasury credit loss is substantial because government fiscal expansion, expanding the resident welfare, especially expanding the power of government in the economic and social affairs. The government in the economic and social affairs will eventually be the economic and social mandatory spending, will directly affect the efficiency of the market and economic development. In fact, the fact that the U.S. economy can enter the capital spending circle in recent years dates back to the Trump administration. Sharp reduction of the regulation of the U.S. government, providing a light scenario for market players. Obviously, high inflation continues and the Fed raise interest rates has made the U.S. economy a recession, even stagflation risk. This means that once U.S. government spending had not effective constraints, so that the continuous expansion of the fiscal deficit is easy into stagflation, and will substantially raise the U.S. Treasury yield curve, raise the price of the global financial market, bringing more painful global financial market risk assets systemic repricing revaluation. If the Republicans hold the fiscal conservative line, set strong constraints for the White House fiscal spending, then the activities of the underprice in the market space will be bigger. The hand of the government power in the economic and social degree will be subject to fiscal and allocated hard constraints, so that the underprice low cost value creation. It'll help to improve the Treasury market credit, the Treasury yield curve of central price decline, improve the market pursuit of risky assets. To this end, all kinds of investors should be prepared according to the possible negotiations. If the fiscal expenditure of the U.S. government is not effectively constrained through debt ceiling negotiations, it is necessary to prepare for the revaluation of dollar risk assets, such as locking the risks through financial risk control tools, doing a good job in liquidity risk management of the dollar, and hedging the dollar shortage. if the U.S. government's fiscal spending by obvious strong constraints. So this means that the American inflation basically peaked. The Fed continuing to tighten will be low probability events. The U.S. economy may experience a slight recession after growth. Investors in the short term can increase the Treasury investment at the same time for the risk assets revaluation reconfiguration. Residual dream after years to see stand. Rebirth of the Phoenix dance. In essence, the current debt ceiling negotiation in the U.S. is that the two parts redefine the boundary between government and the market through the game between the government. Though it will not bring the risk of U.S. Treasury default, the negotiation determines the changing trend of risky assets in the global financial market, so investors should be prepared for it. That's all I have for today. Thank you for listening. Don't forget to subscribe. See you next episode.